take some time and go over problem 5.8 and your other problem for homework. So those of you who are here or listening, you get the benefit. Olson Company's bookkeeper prepared the following income statement and retained earnings statement for the year ended December 31st, 2013. So we see our sales net, then they show us less selling expenses, equal net sales. Then we have add interest revenue, add gain on sale of equipment, add gross sales revenues. I think they need a fire. Then they have less cost of operations, cost of goods sold, correction of overstatement in last year's income, dividend costs, extraordinary loss, taxable revenues, oh my gosh. And then their retained earnings section is a beginning retained earnings, and then we've got gain of sale of Division L, recalculated retained earnings, revenues, interest expense, ending retained earnings. The preceding account balances are correct, but have been incorrectly classified. Assume the income tax amount are correct and linked to the appropriate items. Our job, if you care to take it, is to prepare a corrected 2013 multiple step income statement and a 2013 retained earnings statement. Before preparing the 2013 retained earnings statement, determine the correct balance as of the beginning of the year. Okay? So we got our work cut out for us. What do you think? So those of you who have your computer, you can pull up the template for problem 5.8. Okay? So the first thing we need to do is determine the sales net of $196,000. That's right. Now, you saw when we went through the PowerPoint, they had gross sales, and then they had minus sales returns and minus discounts. But ultimately, the sales net is just fine, okay? So they had more of a more detailed version in the PowerPoint, but here we've got sales net of 196. So if we look at our template here, what's the first thing we're going to do? Sales net of 196. Right? Now, this chick shows selling expenses. What do we know about selling expenses? They're going to go in their separate area, aren't they? So we don't want selling expenses. What do we show after sales? Cost of goods sold. So the cost of goods sold of $120,100, correct? So we're going to go into our Excel and we're going to show cost of goods sold minus $120,100. What's going to be our gross profit, guys? 900, 5, 7, 70, 75,900 is our gross profit. How many agree? Are we cool so far? Now we need to look at our various operating expenses. Now in this case, on the PowerPoint, they really separated out G&A, general and administrative, and selling. Here they just have two. And so we're going to, we see here administrative expenses, 16.8, and we have selling expenses of 19.6, right? So in this section of operating expenses, let's show our selling expenses of 19,600 and our administrative expenses of 16,800. The total of those two is 36,400. Which gives us, what are we going to come up with for our next item here? Our gross profit minus our operating expenses is going to be what? Operating income. That's the kind of stuff I'm going to want you to know. If I say sales minus cost of goods sold equals, sales minus cost of goods sold equal?
Gross profit.
Yes. Gross profit minus operating expenses equal?
Operating income.
Yes. Okay, so operating income, and what do we have here, guys? 500, 39.5. Now we have other items. These are other items related to continuing operations, right? Remember, these items relate to investing and, what's the other portion of the cash flow statement? Investing and
Operating, financing.
financing. Up top were all the operating. Now we have investing and financing. What items would be related to investing and financing? Any ideas, guys? Let's go look back at the book. Investing and investing and financing. What about interest revenue? Isn't that part of it? What about gain on sale of equipment? Isn't that part of it? What about is there an interest expense here?
It's down in the retained earnings.
What about interest expense? Isn't that part of it too? So let's go back here. Let's take our interest revenue. How much is it? 2,300. What's our next? Interest expense minus 3,400. Gain on sale of equipment. Isn't that in investing?
Yes.
And that was 3,200. So we've got here 23 plus 32 minus 34. Who can help us? 55, what?
2,100.
2,100, thank you. So what now, our pre-tax income from continuing operations is 37.4? No, I need to add it. 5, 6, 41.6. Is that right? Does that make sense? So if I said to you, your operating income minus your other items is what? Pre-tax income from continuing operations, okay? Now, what are we going to come up with? Income tax expense?
Yes.
What does it show us the income tax expense is? $12,480?
Yep.
So we'll put in the 12,480. And now we have income from continuing operations. What are we going to have here? 120.
29,120.
Thank you. So our income from continuing operations is 29,120. Now, we need to look at results from discontinued operations and look at those as it relates to discontinued operations and extraordinary items. Let's look at this. What do you think is a discontinued operation and what is an extraordinary item? Extraordinary loss because of earthquake? I'd say that's extraordinary, huh?
Yeah.
What about loss from operations discontinued, Division L, net of 900 income tax? Does that sound pretty good?
Yeah. It's very rare that happens. Yeah.
Okay, so our results from discontinued is,
Earthquakes.
the earthquake is an extraordinary item. So that's going to be extraordinary loss due to earthquake. Okay? Net of 1,800 income tax credit. You usually show these items always netted. So what the loss is, and then the income tax benefit you're going to show related to this. That's going to be a 4,200 there. What are our discontinued operations, guys? Company L? Division L? So we've got loss of operations of loss from operations of discontinued Division L here, 2,100, right? And then, is there a gain on Division L somewhere?
What would you do with the 900 income tax credit and
Yeah,
brackets?
but in the remainder makes.
Okay, the 900 is always shown net. So basically, what happens is the loss from operations of discontinued Division L,
There is a tax credit of $900.
so that's in this 2,100,
Okay.
okay? It's
Okay.
always included. After this income tax, you see how we show the income tax here? After that figure, anything we show as a result of discontinued operations or extraordinary items, you always net it. So we've got a gain here and a loss. So we've got a gain on sale of Division L, and that's net of 1,350 income taxes. And that's going to be how much, what? $1,350? No, $3,150. Because the 3,150 includes the income tax piece component. Remember, anything after the income from continuing operations, we've taken out the income tax. So any of these additional items, the income tax is already accounted for in each of these transactions. Okay? Then we have a loss from operations of the discontinued Division L, and that's a net $900 credit. And what is that amount? 2,100. So these two net us 1,050. So what is our income before extraordinary items? 170, 30,170. When we take into account our extraordinary item, what is our net income?
25,970.
25,970. How many of you guys followed me on this? Yes, no?